everyone to our part two advanced stock picking tactics. I wanted to welcome everyone here, and absolutely before we begin, make sure the sound quality is, well, we strive for perfection, but progress is always a good thing too as well. So if I could get a double Y, just simple, if I have the volume as well as the graphics. If you have graphics, that's also a good thing, because today we got a lot in store. In the short time I wanted to get through this stock picking session and what we're looking for. I know we have a lot of people from all parts of the, well, we've got people, it looks like, in from Brazil all the way out to haven't checked down deep down into Australia yet, but I see we have Dan in Baraboo, Wisconsin. Wow, Dan, Baraboo, Wisconsin. That's not a frozen tundra there. Beautiful land in the summer. Used to go rock climbing out there as a kid. Long time ago. Long time ago. Super Bowl weekend. And, you know, looking forward to maybe a little bit of musicians doing some entertainment at halftime, funny commercials, and a good football game. Not sure I'm all interested in any type of controversy, but that's just me. Had to bring that up, right? It's kind of crazy. What we are as traders, we're traders. There's no controversy. There's only controversy when things don't go right, and we want to avoid that. And so what we do is we start to look at things that are going to give us an edge in the market and avoid the things that may not treat us well. So that's the mantra today, and part of the whole process of stock picking tactics. So before we really begin, let's take a little look-see in the risk disclosure. And since for shortened periods that we have to spend together this morning, I would like to just say you can review this on our website at any time. We went over last week, just to, on Thursday, well, not last week, but it seems like last week, after Thursday night and then coming in Friday with the unemployment report. How wonderful was that to see the market kind of uphold some value? I want everyone to know that we are going to go through today what the Thinkorswim PMC indicator is, how to use it, and how the process is in stock picking. On TradeStation, we'll go over a couple little things today, because I am going to share with you what the value is, what I use TradeStation radar screen for, and again, why we use an algo optimized product. And then Trade Navigator, I think you guys got a quick peek into me using Trade Navigator, because quite frankly, it is still one of the more advanced, I would have to say, complete and trustworthy analytical tools for various markets and analytics, such as spread trading, and they have literally everything under the sun. And again, many of you were interested in finding more about JohnPerson Asset Management, and you can certainly contact our office for that. On Thursday, we talked about choosing the best indicators. You got to be selective in price-based indicators. I still firmly am convinced volume is the lifeblood of the market, but we shared with you ways that we needed to update or modernize the way we look at volume. Modernize the way we look at volume, because conditions have changed within the way that institutions can trade. They can trade amongst their own platform internally. They have dark pools. These have, and with options trading, it has masked the true volume of a market trend or trade, let's say. Instead of going long an individual stock, I can simply buy a call, sell a put. I'm in a synthetic long position. So various events and rule game changers, let's call it, have altered the way we look at volume and its impact on the markets on an initial basis. So therefore, we have introduced to you a couple things to look at, and the reasonable explanation of why normal typical volume histogram is not working as efficient as all the trading books that you pick up say how to use. It is a shame, as I've given many presentations around the country and the world for that matter, that a lot of people have struggled with this volume histogram. People are still teaching how to use volume histogram. Forex traders don't even have the advantage of looking at volume analysis. And it is a disservice and a disadvantage, and it reduces your edge in the market if you look at it in a more reasonable, modernized way, I believe. And that's one of the things that probably helps us to determine divergences in a marketplace, and for short-term day trades as well as longer-term stock positions. So bullish convergence and bearish divergence on a volume setup is paramount and part of one of my main trading plans. And when I see a market that gives me the opportunity that I see that it's run out of steam, it's run up, it's taken out a prior high for an intraday basis, and I'll show you an example even just yesterday of where that market condition comes in, it gives me an improved odd of directional trend. The question is, am I quick enough to take the profit before the market takes it back from me? That's the key. And that's part of trading in this game. Market conditions. That's part of the tool that we talked about. Market condition has to do with the various segments of separate indicators that work on various individual instruments. An instrument such as stock indices. Stock indices. We have a very select, and for that I'll just give you a look-see. For individual stock indices, we have a look-see in what's called the advanced decline analysis. So if we take a look at the advanced decline, this is the advanced decline on the S&Ps, and you'll note that we did break out to a new high over the last 52 weeks in the advanced decline. That is powerful. That supports the notion that the overall equity can continue higher and may test the highs. Now, do we see a little maybe pullback first over the next couple days? Possibly. We'll get into that in just a minute. And on your screen, that's probably, since I'm trading S&Ps or the spiders, I pay attention to what the individual advanced decline is doing on S&Ps. And that is what I'm talking about, an individual tool for an individual trading instrument. So just to be clear, I'm just sharing with you, this is an advanced decline line of the S&P 500, not of the NYSE, not of the NASDAQ composite, but it is the advanced decline cumulative ratio of the S&P 500. That is a unique tool to a stock index, and that's my point. We still have a volume indicator here with OBV, and we have a proprietary volume indicator which suggests the momentum has weakened. Now, this is an interesting aspect that we introduced to our traders on TradeStation, and you guys might be interested in hearing, how do we modernize trading tools? Advanced decline work is a specific study when you're trading stock indices. You generally can't take a advanced decline and use it on a commodity like gold or crude oil. It doesn't work. There's no 500 stocks in crude oil. Crude oil is crude oil. And you can't take a look at the advanced decline to say, I believe that Facebook's out going to perform its expected implied move because the advanced decline on the S&Ps is strong. That doesn't work. There's a different tool for that, for measuring an individual stock. So today, what I wanted to go through is say, what is the, when I go through my methodology, my top-down approach, and I go, all right, what is the condition of the market? Are we favorable that the trend right now is moving up? Because if the trend of the market, or the health, let's call it, if I take a temperature of the market and it's overheated, then that's an issue. If I take a temperature of the market and it's frigid, in other words, if the advanced decline is plunging and I'm in a sell mode, I'm still looking for downside action, and catching bottoms is dangerous. And we all found that out in the October and through December, specifically that last week before when Jerome Powell came out with the Fed and raised rates. The market, no one thought he was going to do it then, and the world was stuck long in the market. And how do we know that? We shared that last week's video with the Commitment of Traders report. Small speculators, hedge funds alike, were boatloaded long the spiders. They were short the Japanese yen, and they were all short bond prices. Bonds just absolutely screamed to the upside. Stocks scrambled to the downside, and the Japanese yen exploded in what a lot of people call the mini flash crash in the currency markets. But the Commitment of Traders report revealed that speculators were on the wrong side of the trade, but the indicators suggested that the trend in the S&Ps was weakening well before the market crash. So advanced decline is a very extremely, even our own work, if you read back all of my research reports in our financial weekly advisory service said more weakness to come, more weakness to come, more weakness to come. So that's how we were playing that. Now, as we started to climb out of the abyss of the bottom, our research suggested, gang, we've got now an upside move. And we've been kind of positioned for that. How positioned have we been? Well, this right here tells me still that on dips, I want to be a buyer and not to be, unless we get, keyword caveat, unless we start to deteriorate and break down over time if the advanced decline starts to relative weaken again. Remember, we can go from new peak highs, but when we start to break down in the advanced decline and we're in a price-based sell signal like occurred back here at the end of September, that tells us that we're looking for a correction, B pullback in the marketplace. So I wanted to be succinct, and I wanted to describe exactly what I do and what I am doing right now for this week in preparation for this week's trading event. That's the key. I know there's a few economic reports coming out. I know we have a boatload of earnings to come out, and I am well aware that we have the President's State of the Union address Tuesday night. Now, what else do we have to contend with from what's on the horizon? We've taken the Fed off the table for right now. We have maybe the Chinese talks, and also now to focus in on another item, which is called trade concerns. And that is one of the things that I think is the market wants to hear about. And I think right now we're starting to see what I was considering, even in our own live trading room, gang, another metric of measurement that tells me, is the market returning to normalcy? And one of the things that we look at is this concept called average true range. And in the ES right now, the average true range is around 37.52. In December, it was at 96 points. The 3-year historic average, is approximately 26. Let's round up if I want to be overly generous. It's 27. So we're seeing, number one, a contraction on a day-to-day basis to normalization in the overall, the way the market trades. That's interesting, and that's a new, better development, because now it can attract more people who are on the sidelines, scared of the daily price ranges because they couldn't manage risk. And if you can manage risk, you can then therefore participate in the market. If we start to see more participation in the market, that's a good thing, not a bad thing. That's a good thing. So this is an average true range, and we can utilize ATR, and you can see it's clearly on my TradeStation package. I can take a look-see at the average true range and look compared with where it currently is. So let's go over and take a look for equity traders. I'm going to go down here and I'm going to look at the SPY, and I've highlighted SPY, and you can see that the current ATR is 3.52 points. Well, that's consistent with the S&P futures at 37, right? I mean, that's about equivalent to the SPY move. Next, what did we move on Friday? 2 points. So we're starting to see daily ranges trade under the ATR, and the ATR, or the average true range, is contracting. So that means volatility is coming in. That would attract people who've been absent from the market because they say, wow, the market's going up. It looks calmer. I don't have to worry about waking up to a 40, 50, 60 point lower open, or 5 or 6 or 700 Dow point open, because that's what scares investors away from the market more than anything. They don't say, gee, what a great buying opportunity. They say, ooh, scary. Now, we're traders. We have different opinions. So when I go through and I say price-based indicators, volume, market condition, consensus I already talked about, which was the Commitment of Traders report, which we covered in the first session, and then seasonality. And seasonality is pretty important. None of that is brand new to me. And I shared this with you last week. This is my 12-point trading methodology. You know, this is something that for the most part, we've had for almost 2 decades. And even more than that, since the beginning of the late 80s, where I did use seasonal, early 80s actually, with George Lane, seasonal analysis. We always used volume analysis. So there's been a lot of different concepts that I've used for literally over 40 years in this market almost, and yet all we've done is help modernize and look at and be more efficient in what tools we're using, and that's the key. On Thursday night, we talked about this importance of look at the seasonal trend, industry group, look at the relative strength, volume trend, what's our pivot outlook, what's the daily, weekly indication, and stock index traders need to watch the advanced decline levels. And so I'm not teaching anything that I don't do from a first in order perspective. First in order, what does the seasonal trend of the market in February look like? What is the current overall health of the US equity market? And what are the seasonal trends of the strongest sectors right now that we could take a look at? Now that makes logical sense in that order, right? Think about that. Listen to what I just stated. Very important. What's the seasonal trend of the market? What are the strongest sectors that we could look at? What is the overall health of the market right now via advanced decline levels? Well, we just noted that the health of the market is at unbelievable strength because the breadth of the market is now at new high readings, and that gives us the suspicion that the equity markets are capable of making and retesting their highs. If more money comes into this market, if the scared money comes off the sidelines, this market's going to run, and it's in that condition right now. But it's not going to be that easy because nothing is ever that easy. We will be seeing maybe market gyrations. We will be seeing, again, if we come back to normalization, that sector rotational grind that we saw that exists and has been more present since indexing has been popularized since the late 2015. More and more index funds, more and more index funds came into play. It seems every new analyst and everyone out there has a new index or a new ETF, and everyone's trying to build one because they're lucrative to have your name on an ETF. But that doesn't mean they're going to succeed. What we look at, what we should be looking at, is where's the volume action in those ETFs and what's the logical creation of those ETFs. If there's no logical connection, then we want to stay away from them. If there's no real volume in them, we want to stay away from them. So we can filter that out. But the point being is that we have a checklist and we want to look at that checklist as we move forward. And when we see a stock and it's in a buy mode, I want to note, is the relative strength improving? Is there strong volume appreciative in this move? Can we, and if so, then I'm willing to get into that trade, especially if it is within reasonable seasonal strength in the marketplace. So remember, last week on Thursday, we went through and said, let's take a look at what the positive trends that gain ground from late December through the end of the Q1, which is March time period. First is energy, materials, retail, regional banks, crude oil, and gold. We know crude oil is breaking out, and we'll cover that in a second. Energy and crude oil, one and one in hand. And then gold, which has been strong, as many of you know. This is an old chart with just the same old stuff, and we built this up years ago. Regional banks, by the way, is what helps have a strong cap weight to the small cap IWM Russell. So what are the weak trends once again? The insurance, the utilities tend to weaken this. Weaken is a bad word because maybe underperforming market doesn't mean they can't go up. It means they won't go up as much when they're in a seasonally weak period of time. Industrials have struggled, healthcare struggled, biotech, consumer staples. Some are doing great, some aren't. They're weak. They just don't outperform the overall market. So with that said, let's turn our attention, as promised, to Thinkorswim platform. Now, I'm once again going to look at what is the strong positive trends. Let's focus on energy and crude oil and materials for right now. Retail's another one of my favorites, but it may be a slight difficult pattern right now. And the reason it's slightly difficult right now is because it had an enormous run up, but we'll take a look at that as well. My focus is in energy, crude oil, and materials. So let's go over to Thinkorswim. And so the first thing that I'm going to do on Thinkorswim is I'm going to run a scan. And so let's add a scan function. We're going to do two things. I want to add a study filter. So let's go and just double check something here and just make sure that if you're a Thinkorswim client, hit add study filter. Boom. First thing that comes up is alphabetical. It's ADX crossover. Click on the drop-down menu, go down to where it says license study, and we're going to use PPS buy signals. So we're looking for bullish signals. I'm hitting buy signals. Now I want to go, and if I go to scan in category, all symbols, I'm going to go all stocks. Believe it or not, all stocks. Why? You'll see in a second. All stocks is already, because it's, I guess by default, it's already there. It's alphabetical A. So all stocks. Add a filter for stocks. So what I want to do is my filter, it's done alphabetically, so the ask comes out. Well, I'm not going to run a scan and filter out the bid and the ask, but I do want to go with volume, and I only want to look at stocks that trade daily, maybe more than 700,000. So on a daily basis, 700,000, still kind of thin, but we're going to put it up there as a filter. We're scanning every stock, and then go over here. You'll see it. You're over by PPS, the study bar. This is the bar that said add a study filter, and we chose, again, the licensed function, and then we selected for buy signals, PPS buy signal. We're going to scroll over, and we're going to change this to a week, because the week is over. And then I'm going to hit the button that says scan it. So what this is going to do is going to filter out any penny stock that trades, or any stock, for example, that trades less than 700,000. And we're going to hit the scan, and we're going to wait for a second. Now, first and foremost, may I teach everyone, never try to run a scan. First and foremost, never try to run a scan during your trading hours. This should be done, I guess you can do it if you're trying to get an edge on what will generate a buy signal, but this could clog up your trading if you have heavy positions on, and it may take a lot of resources. I'm just for food for thought. All right, but let's take a look at what we found. We came up with 173 names. It only shows 10. If we go up here, 173, let's go with show me the 200, and then I'm going to hit scan again, and now it shows up. So what am I looking at? All stocks, everything populated more than 700,000 volumes. So 793, 880, 766, 739. What's the point of doing this? Well, here's the point in doing this. I have an overall market that's strong, and I want to find out what generated fresh new buy signals in maybe energy, materials, or maybe retail. We'll find out. So I'm looking for those sectors. I'm looking for buy signals in stocks in those strong sectors. Oh, that makes sense. So that helps my work. This actually breaks down how many of the stocks in what sectors are doing well. We have some biotech, we have some pharmaceuticals generated a weekly buy. Johnson & Johnson, we could take a look at. It's not one of the greatest time frames for that sector, so I wanted to kind of avoid it. And as you notice here, we go down, metals and mining, chemicals, chemicals or materials. So Albemarle, ALB, popped up in the scan for a weekly buy signal. Pretty interesting. And then that's the materials sector. So materials, if you take a look, we'll get through that in just a second. We have a kind of, whether it's metals and mining is a material, right? So we have some interesting ideas in metals and mining, materials, containers, packaging, and materials. Leiden Albase is one, LYB. We have Albemarle, ALB. That's kind of interesting because those are in that space. So now we got to kind of take a look at that. And then finally, in the energy space, oil and gas, energy. So we have, well, Exxon had earnings. We saw that. CVX had earnings. We saw that. And Anadarko Petroleum, APC, up $1 in sympathy with the rest of the sector, also generated fresh new weekly buy signals. Now, there's one more metric that we can look at, and I'm going to take a look, and I'm going to go to, let's take a look at LYB, and let's take a look at APC, just for the heck of it, and then we'll throw in an Albemarle. For that, I'm going to my chart page, and now I'm going over to, let's take a look here, maximize, and I'm going to throw in a daily chart. So the daily chart has a daily chart with weekly pivots on the market. All right. This is the XOP, oil and gas exploration. I'm already following it. We were in a position. We flattened the position over the week for the weekend. For different little zigzag, volume was light. I'm not saying that it's bad. It's probably going to see more sideways consolidation as a sector ETF. But what we are looking at is individual stocks at this point that can join this move. So ALB is the first stock I want to look at. And the next tool that I want to use, gang, we discovered that the overall market looks good still. So there's room to run. If more people come in the market, we want to look at undervalued stocks that are entering a seasonally strong period of time that are now showing signs of recovery. That's the whole point. So now I'm going to go over and I'm going to add one more study that is very unique to individual equities. And we're going to go over to JohnPerson's indicator, and very rare do people understand what this stands for. This is a relative strength tool that compares the performance of the underlying market to the benchmark S&P 500. And it gives us 4 colors, which defines 4 stages. Blue means it's weakening. And after a market runs up, if the relative strength is starting to weaken and it goes to dark blue, it's decaying. It means it's weakening against the overall market. When it turns red, it suggests that the stock is now in a position of weakening and lagging the overall market, and therefore is not a great buy. When you jump into a PPS sell signal combined with weakening volume and the relative strength is bad, that's a great short. That's the combination for selling short. But now we're talking about a sector that may come back after everyone got blindsided on the downside, probably not familiar with, maybe this is not the greatest time to be in Albemarle, but it was a $108 stock. And I mean, Lord, it went to, about almost a 40% retracement off the high. I mean, 38% is pretty significant. If you were investing up here and everyone thought it was a great stock and a breakout, which I guess for a breakout purpose, it was looking great, but the market, watch this, gang, is this high from September 20th lower than the closing high of November 6th? Sure it is. So November 6th, let's call this the number 2 point, higher than the number 1 point of 920. This close is greater than that close. This close is greater than that close. So if that's the case, why is the volume on the secondary runoff lower than the preceding peak in price? That is what we call almost a classic bearish divergence. The market did rally, took out the highs, but no further strength came with it. The relative strength was getting strong, But then all of a sudden, over the next couple days, the relative strength started to weaken and the trend fell apart. All right, that was then. What about now? Now we have a stronger equity market overall. We have the breadth of the market sharing that we could see newer highs. We have a stock that is absolutely widely held, good volume, and more importantly, a material sector stock, and it's in a seasonally strong period of time. Interesting to note, the volume all of a sudden, as the market kind of sidewind, the volume in just the last 1, 2, 3, 4, 5 days have broken out to blistering heights. And the relative strength is improved and has flashed a now outperformance signal. So the question begs, when you look for buy setups, the question begs, when does this, which looks bullish, you ask yourself, does this new setup start to look like my business plan setup? Are the indicators that are non-correlated, are they improving? And that's what I wanted to pay attention to. So when I said on Thursday night, I'm going to walk you through both platforms and share with you what we're looking at, this is how I do it. So let's go over here and let's take a gander at my scanner with TradeStation. A couple things that I wanted to share with you. I search for what's called high close dojis that's not available anywhere else. I look for my high close doji weekly buy signals. And what is interesting to note is that in the material sector, and we look at basic materials. Now, first and foremost, I'm going to change this symbol and go alphabetically. And Albemarle, ALB, actually is right there on our list. Wow. And it's a basic materials. So that's pretty cool. Here is the Albemarle formed a weekly buy signal, in the form of a high closed doji. So that to me is pretty impressive, number one. When I look at the weekly chart on Albemarle, I go, whoa, wait a minute here. While the relative strength here is still red, this is a weekly chart now. I look at this area here from the beginning of, or the end of December into the beginning of February, and that is a sharply different low or chart perspective than it was back in beginning of 2018 into that March, April time period. True, we're a lot lower than we were a year ago, but the relative strength is actually a lot higher. This is a proprietary histogram. This is part of my package and part of what I look at my 12-point indicator package, so to speak. And the histogram, the momentum of the market has started to improve. Volume on accordance to the on-balance volume, as you note, has a lower low reading. Well, I didn't say that on-balance volume was perfect. It's better than volume histogram. And there's many times where this is my proprietary volume indicator. And this is volume indicator suggests, by the way, in terms of percent change, not actual volume. And more times than not, it gives us a clearer reading and shows bullish and bearish convergences better. And in this case, it's confirming Albemarle has and does have a bullish convergence in this stock at these lows. If the market comes back to normalcy, if fear subsides in the market, if investors come back, and if it's true that the advanced decline supports a move higher in overall equity markets, the underdogs that have scared people may be the darlings that people return back to. So I will be looking for, at least Albemarle, a pullback into the market because we had one blistering upside move, and I will be looking to buy pullbacks in Albemarle. And quite frankly, I'll be adding this to one of my lists for this week's stock selections in our weekly advisory service. Albemarle is up there in that condition. So that's number one. Now, what about energy? And that's another interesting item, because when we go down to energy, another thing is, let's address another sector of the market real quick. What about Nucor, Schnitzer Steel? We're starting to see that time of year where, wow, I mean, it might be a little late for this one because it got blistered to the downside. They washed and rinsed the world in December, recovered it back in January. How strong does this stock look moving forward? Well, it really hasn't gone anywhere, but I will tell you the relative strength Person's market catcher on a weekly basis is showing signs of significant improvement. The overall trend of volume is, it's neutral because the stocks really hasn't. I mean, if you bought the stock at 67 in the beginning of 2018, it probably doesn't feel good that it went to 50. But this is another stock that would also be in a seasonally strong period of time with stronger relative strength performance. Market made newer lows and it had a stronger convergence. So maybe this is the year that we start to see steel stocks outperform. Any positive news comes from China that says we're not going to dump anymore, blah, blah, blah. This, or we get a spending bill for roadside bridges in Chicago. For gosh sakes, there isn't a single bridge that's not rusted out. Pretty much on the south side of Chicago. God forbid you go to near that area where it's called Midway Airport, which is beautiful, by the way. But over there where Sportsman's Park, unbelievable. Cicero Avenue, bridges they're just it's in a decaying state. And I mean, we haven't heard about this in a long time, but we'll see if we get a spending bill that comes out. Maybe if that's a topic in President Trump's State of the Union, maybe perhaps this is the sector and some of the stocks that could go up. I'm just tying in what would drive these areas and recovery in prices this time of year. All right. Now, again, energy. Well, it's ironic that we have a Valero. These are fresh new buy signals. We have, again, ConocoPhillips, Viper Energy, Occidental. For the record, we currently have a position long in Occidental. The question begs, do we add to it? In our weekly thoughts and observations, we added to PSXP this week on a dip and we got lucky on a partial fill. And yes, I'm looking at some of these stocks with the best improvement. Look at PSXP's relative strength in the Person's market catcher. It's outperforming the performance in the S&Ps over the last couple days and the last couple weeks included. How's the volume look? Well, our volume indicator is doing what? It's pointing straight up. So it's showing some sharp improvement. So I am looking, and this has been kind of like a sideways dog stock, but they washed it to the downside. They washed and rinsed it, and now it's free and clear to see if we can see further upside gain into the top end of resistance. So I'll be looking for a few other names. Chevron, high closed doji over here as well, with outperformance relative strength in the marketplace. So the stocks that we're probably looking to focus in on are in the material and as well, and which specific materials. We have a couple steel stocks that have picked up, and we have what? A couple material stocks like an Albemarle. And so we've got, whether it's AK Steel, which had earnings this week, and it's starting to see relative strength improvement. So we're starting to see what I like, and that's the whole purpose of running a scan like this, again, gang, in Thinkorswim. When we run that scan, is to find out, is it only one stock in the sector, or are there other stocks in the sector? And if there's other stocks in the sector, that makes me feel warm and fuzzy. That means more money is coming into that sector. That means institutions are aware, or at least participating in the rule book. What's the rule book? First quarter positive trends. So we're seeing gold miner stocks up, and then we have energy and materials. So those are the kind of the interesting components of what we're seeing. Now, lastly, let me also point out something else. And this is what we've done in the live trading room, but I want to go over and share this with you because I believe I wrote an article on LinkedIn about this to our group, and I tweeted, I think it was out on the Twitter as well. Crude oil. Let's take a look at March crude oil because that's our first contract month. And I want to take a look at this daily chart condition of the market. And if we change over from candlesticks and I'm going to go to just bar charts, let me point out to you that we got a very interesting close. And you'll notice that this fuchsia dot from way over here, which was back in November, and let's just give you the exact date. So from 11/23, the high of November 23rd, that single day, the market broke. It came back to test it once, twice, 3 times, failed. Tested another time, failed, another time, failed, another time, failed. It's been trying to break through, and it finally broke through Friday at the end of the week, at the last minute of the day. And what's most important, many of you, if you print this chart out and flip it upside down, this is actually a actual textbook inverted head and shoulders pattern. It's a symmetrical one at that, because the time it took for the left shoulder to form was precisely the same amount of time it took for the right shoulder to form. In fact, it actually shows up as far as our volume indicators. We can see several different, and it actually looks better from a volume perspective, because as the market moved down and made a secondary new low right at Christmas, the volume made a convergence low. Price made a lower low. Price made a lower low. Indicator of the person's proprietary volume indicator, that's the VM indicator, made a higher low. So now we are in a situation where indicators are outperforming the market. Momentum studies are showing there's strength in the market. And we now have a daily chart that reflects a potential breakout of an inverted head and shoulders pattern. The neckline is measured at the highs, and more importantly, this is just a simple JohnPerson last conditional change candle, which we really greatly appreciated that the market closed greater. This suggests the measurement objective from the neckline to the inside of the head measures, by the way, up to around $65, 64 and change, let's call it. You could be conservative and say 63.50 to 65 if you want, but this suggests upside. So what typically can happen with head and shoulders bottoms is that they break out of the neckline, they have some strong momentum, they come back and test that neckline one more time, but the overall trend is up. This is a very positive pattern in a very strong seasonal tendency. What's also very nice about crude oil right now is, number one, the longer term momentum studies, and this is the weekly chart, are all pointing higher. That's pretty crystal clear here for most people to see. Higher. All right. So when we look at the amount of volume that's come back into the market, it's pointing up. It's the seasonally strong period of time. And this is a go trade, a confirming that the long side on dips can be taken. Now, we've just come from 42 where the market rocked the world. We formed that high close doji. We got a PPS buy signal. And note, we still see the market go up, it breathes back down, and then it takes off. So it leads me to suspect we could get an intra-week dip in the market, and if we start to break back on that dip, that's when you can go with that trade. And your objective is, ironically, back up to around that 64, let's call it where the market stalled before. You have an old peak here, an old low there, and that's about where the market can get back to in a seasonally strong period of time. So looking at the markets in several different fashions, I wanted to go through and just keep in mind, folks, let's go back and review. Did I say that I don't look at chart patterns such as wedges, channels, etc., or head and shoulders? No. What is a seasonal and cycle analysis? Bullet point number 5. What does my volume analysis indicate? What does my person histogram momentum indicator show? These are all very positive things for the market. And then lastly, one item that is exclusive to commodities, by the way, and this is what we were going to share with you as well. One item that's fairly unique to the market is called open interest. And open interest is a very powerful move. And the open interest, as we're starting to see the move up in crude oil, is starting to accumulate. And that shows that there is accumulation in new open trade positions. That shows that investors are coming back into the game. That's important. Now, if you take a look at the market in the structure, and I'll change a couple things here real quick. CLH19, we're going to change that. We're going to go CLJ19. We're going to change that to April. We're going to go CLK19. That goes to May. And CLM19, and that gets changed to June. Now, I want to share something with you. We take a look at crude oil, and we go out the board, it's called, in a inverted or a market that is in backwardation. It shows there's more supply going forward. In a unique product like crude oil, we want to see it more in contango, where there's ample storage, there's normalization in the curve. The curve is from the current month's contract going out forward. 55.37, 55.65, 55.98, 56.30. The crude oil is not in backwardation. It's in a normalized market. So that shares to everybody. This is also positive. How about average true range? Now, despite Friday's $2.28 move or 29-cent move in March contract, look what the ATR is, $1.86. This is about getting close to its 3-year norm as well, friends. So this is a good thing, but the ATR expanded where? Down or up? Up. So it's a positive thing. It helps just give one more confirming edge that I should not be looking at selling energy. I should be looking at buying energy and look at specifically in crude oil. Now, we do know there's a situation fundamentally with Venezuela, et cetera, et cetera. We did have positive reports from two behemoths, Exxon, Chevron, in earnings. And therefore, if you're trading stocks or trading commodities, you can look at the long side of energy, because right now, everything is supporting rallies. And that means that when we get these intraday or intra-week dips, look to buy against support. One last thing. We cover this in our live trading room all the time. In fact, I'm going to share not the exact trading page, but in our live trading room, we have two main rooms that we've created. One is the main room that we are talk about stocks and different markets. And the other trading room is an algo room, which means we have our own signals on an automated trading system running. And what we tell people is to take a look at the signals and then use confirming indicators to see if you want to join those signals. And so this is a very similar model. Now, we don't run signals, and I'm going to just share with you a couple unique items. We don't run signals that run all night long. We have signals, this is very close to what we have in the trading room, that are only designed to trade during the time that we're in the room. Does that, I mean, why would you want to come and look at an algo system that's already been trading in 3 in the morning and you can't participate in a live trading room that's not open at 3 in the morning to begin with? But these are strategies that we keep up in the live trading room. Part of what we have is, of course, the E-mini S&P, crude oil, and then the euro currency. So some of the most important tools that we believe that I've been teaching for decades, you know, I worked with George Lane. I want to have indicators. I want to have tools to use to help me focus on the right side of a day trade. If a market's showing that the move to the upside's on relative weakening volume, here's my volume indicator, then maybe I want to take a short trade to the downside. In fact, I think I gave out a YouTube video describing exactly that particular trade that went, it was long and it went short right in front of it while I was doing that video. It was pretty interesting. The next is the S&P. So we also want to see, while no algo system is going to be perfect, we want to see systems that can perform well and at least over time on a week-to-week basis show a profit during the week. Now, this is not a, I know everyone can do better, so don't interject, but this only trades from 6:45 in the morning. No more trades after 3 o'clock, or excuse me, 2 o'clock, because we we subtract from 1500, so 2 o'clock. So this only trades from 6:45 Central Time to 3 o'clock, or excuse me, 2 o'clock Central Time, and it exits every trade hands down at the end of the day. That's the system on a 5-minute basis on the ES. The euro currency, same story. The start time's a little bit earlier for the euro currency in this model, only because of the fact that the euro does trade. It's a euro currency. It's 3 in the morning deal. But any trade that happens, it exits at the end of the day, hands down. Those are kind of important things that when we have up in the live trading room, and again, periodic returns week to week, not too bad, performance graph. These, I mean, let's face it, the euro currency is not going anywhere fast, gang. It's been in a very, 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 very tight range. But we can capture some money and trades off of that. And again, crude oil. We also have another unique situation is that we have our live spider model, which trades 60-minute spider, which is another stellar performer, currently long the model. And I said that if we broke down, it's getting ready to max out its holding period, by the way. So I'm believing that we're coming close to a max out, number one, and a stall on this rally. So hopefully this week, Monday, Tuesday, Wednesday or so, we get a slight pullback in the market and then join the overall trend on a pullback. So that's kind of what I think is very critical. And then lastly, this is the kind of work that we've been doing, is to make sure that traders understand what side of the market to be on. And it all starts with the 12-point bulletin, number one, that we gave out Thursday. But this is how I wanted to start off the month of February, saying, what do we look for? How are we looking for trade opportunities besides looking for earnings for equity traders and equity options traders? I know everyone's, what about the earnings on this and the earnings on that? And what are you prognosticating here? I mean, earnings is an entire different beast. I guess we could very quickly look at a couple items on Thinkorswim, looking at this week's pre-market condition for Facebook. I know I thought we shared this before, but back in December, here's this amazing combination where you had a massive bearish downside action in price, not followed or accompanied by any volume. The on-balance volume showed one of the strongest bullish conditions. And look at the relative strength from Person's market catcher. It was showing you that while granted it was falling, it was underperforming the market. As it fell, it was actually outperforming the market. It was bright blue. So this was suggesting that Facebook was already in a buy. But how do you trade a market ahead of earnings? This was, at the very least, you're not looking to take before earnings a buy signal on breakout and upside in volume with relative strength. It's either one of two things are going to happen. In this formation, it's trend consolidation, and it's going to resume the trend, or it's going to puke because everybody is already in it. Apple, let's take a look. AAPL. Apple was a little similar situation. The volume was too strong. The relative strength was slightly improving, but it wouldn't rally anywhere. This is one that we absolutely didn't think that if this had bad news, which they did, and if it was received badly, this would have had a disaster. This was one that also I wanted to point out to you, gang, and I know a lot of you longer-term traders may know that there's a huge monthly, on the monthly charts, a gap down at around 125. One of these days, they're going to fill that gap. But Apple did have again, a questionable move one way or another. And this, by the way, is one of my other ways of handicapping the market. If a market doesn't move and everyone's in it, and we see a strong upside trend in volume, it makes it susceptible for downside disasters. I want everyone to listen carefully to what I just said. If a stock goes up and it barely moves, and the volume suggests that it's very strong in its pattern of accumulation, it leads me to believe, because it's happened many times, where I see the market, I look at its lack of performance relative to the overall market, Everyone's long the stock. Bad news comes out. It's a disaster because everyone that bought the stock thinking it's got good news coming, they're wrong, and everyone's student body left to the downside. So part of when I see a stock like this, I tend to shy away from it, and I'm more nervous on that. In addition, this is not one of the greatest time frames of the year that we see a lot of technology companies advance, and that's why we haven't really covered a lot of technology names right now. So we're starting to just focus on what does the market do, improve its odds of making money. And that's where we wanted to run through top to bottom on what we've done. Year to date, I shared this, but I wanted to make sure that you guys saw this in specifics. Before, in December, GE, we're still held into GE. We had, I believe, Thursday, review the video. We shared exactly why. We had this very similar situation, bullish convergence, yada, yada, yada. Anyway, GE. Oil and gas, XOP. We closed the position out along from 25.64, closed it out Friday, but make no mistake, if it shows black, it means it's a current long position in the portfolio. And this is our year-to-date performance in the market. We have Best Buy. We have in retail. We have added Phillips 66. We added Phillips 66 on Friday, PSXP at 49.58. It had a quick little goose to the upside. We have a Oxy Petroleum, as I already mentioned, from 65.75. It closed at 68.04. And so we're looking to add to a few positions, and I'll be looking at Albemarle, and I'll be looking as we get into February, we'll be looking at new stock picks that we've gone over together today for my own advisory service. I'm pretty proud of this. I mean, we had a Bank America long, we're out, an Activision, it didn't go right, but we made money on the spread. We were in a ratio back spread, not a 50-55, and we got a 40-cent credit. We sold it at 12 cents for a net gain. Newmont Mining, we put on a long call, a leap, just to take the longer term element of gold going higher. And as you know, gold has moved up. So that the reason we went with a leap, because didn't want to spend a whole lot of money in Newmont Mining, to be honest with you. On the future side, we did a nice short on the knob spread, and then currently we are short TLT in a partial position, and we were looking to add to that on a scaling at 122.33, which we came close to getting filled this week. But that's our shooting record for just this year, and the reason why. Every one of these stocks we're entering seasonally strong periods of time. Now, many of you do not know this, but that report right there is a financial advisory service where we have weekly written reports sent by email and posted on members sections with video reports, action alerts, and access to live. Everyone that gets this has access to the live trading room. And the live trading room has those two rooms I mentioned, the rain room and the algo room, where you can see the signals develop as they click. It's not backdated, it is live. Instant access to our replays of past planning and scanning videos, pre-market planning and scanning, which begins every day at 9 a.m. And we have a wonderful, many of you may have seen this in your emails, a wonderful presentation to help promote and help traders, maybe for those that are looking for equities or at least learning to trade the markets appropriately in this environment with proper guidance. Have our weekly thoughts and observations, learn from us as an ongoing learning process, and help you make better trade decisions on your own. More importantly, because a lot of people may be struggling with what I call the mental game, I believe that we also added a bonus for everyone, which included my mental game summer school self-improvement sessions. So if you're interested for your first month session, just simply click on we'll send a link out to you guys. And I do know that that is a special presentation that we offered in your email, number one, which came with this offer right here. It was an email that looks just like this, the mental game with the thoughts and observation, the online trading room, and it was for a balanced price. Everyone can check this out yourself. I believe if you're interested in 1 month, I would take advantage of it and read the course and help